All right. We should be live, sir. What
Awesome.
is up, Gally?
What's
How
up?
are you surviving the winter blast or whatever's going on out there?
Yeah, actually just started snowing, but yeah, I am surviving.
Nice. And so you're in Manhattan, yeah?
I'm in Manhattan. Yep.
Dope. And you already did a hot take of the earnings. But now that we have a gazillion people watching here on my channel, let's hear how it goes. What do you think, man? Tesla earnings just came out. Are we thumbs up? Are we thumbs down? Are we buying, selling? What's the deal?
Thumbs up through the roof. So Tesla reported second profitable quarter in a row. I actually personally heading into the quarter thought they were going to be lower than Wall Street's estimates, and that was going to be sort of the headline is like, oh, they missed estimates. It was like 7 billion. I was estimating 6.7 billion in revenue. And they came in at 7.3 or 225 billion. So they beat Wall Street's estimate way above my estimate. They said profitability was going to be a little bit lower this quarter than last quarter, but operating income was down from 416 million to 413 million. So still very healthy, very profitable. So huge. And then the cash flow numbers as a result of those better revenue and earnings were better than I expected. They added 800 million almost in cash, went from 3 billion to 3.8 billion. So all the Tesla, the financial health of the company is better than ever.
Great. And I have actually a chart here that I think I can show you as well as everyone online.
Awesome.
And let's just have a look at this. I think people should be able to see it now. Are you seeing this here? This is my little dashboard I put together of the financials.
Dude, this is sick.
You like that? I know you've got your own chart thing going on, and I think everyone
Hypercharts,
should.
bro. You're one upping hypercharts, dude.
This is just what I've been doing forever. So don't sweat it. I'm your guys' stuff is much better.
Yeah, this is
So
awesome. So this is revenue per quarter, correct?
right now, yeah, this chart here is revenue per quarter, and you can see Q4 2018 at 7.2 billion. And you can click. So this is on my website as well, teslanomics.co/Tesla-financials. It's interactive. People can play with it. So you can change that to like net income and see it was at 139 million, so still profitable, but a 50% drop from the previous quarter. Did you do year over year calculations on this? I think mine is just set
Yeah.
up for a quarter over quarter right now.
Yeah. And also the problem with that is the number I quoted for earnings was operating income. You're looking at net income. So
Right.
the net income fell for some other reason. I don't know why, but the operating income was actually very stable, like down 1%. Um,
Right.
so I
Right.
think that was pretty good. But I mean, the revenue chart, like this is awesome. Like you see the
Yep.
growth. I mean, so it says 5.6%, 0.9% growth. That's sequentially, but like from the same Q4 2017, which was like 3.288 billion, it was like
Yeah.
120% growth. So Tesla grew its revenue 120% for the quarter, which was huge. And I think they lost about zero point 0.6 billion last quarter in operating income, or this year ago a quarter. So, and then this quarter they made 0.4 billion. So $1 billion swing in
Yeah.
profitability.
Yep. And then you see gross profit came down just a tad there, so -5%, but still doing well. We got cost of goods sold. This one I don't like. I don't like this going up. I think it makes sense. Any thoughts on this one going up here? I kind of wanted to see this level out a little bit more instead of this hockey stick on the cost.
Yeah, I think what's happening with COGS is that they were building a lot more of the lower margin Model 3. And so that's why their gross margins actually fell from 23% to 20% sequentially. So that's what you're seeing the higher COGS there.
Mm-hmm. Mm-hmm. And then SG&A, I like that this is going down. This is one of those things where this is a big question, I think, because this is, I think, much higher than other automakers. Obviously, Tesla doesn't really fit into the classic automaker category, but just thinking about one of the reasons I believe this is so high is because they don't have a dealer network, because the dealer networks actually take a lot of the liability off the
Yeah.
balance sheet, right? Like as soon as a car is produced, it like the dealers essentially take that liability away from the manufacturer. And here, I think they have to hold on to that is one of the reasons I understand. Any other thoughts on SG&A?
Yeah, no, I think they're trimming the fat here, and that's like why it's going down. And So in their letter, Tesla guided for only 10% operating expense growth in 2019, but their car deliveries at the midpoint to grow 55%. So you have a company that now has built up all this infrastructure. The costs are growing at 10%, but the revenue is slated to go. I mean, the unit deliveries of their best of their products slated to grow 55%. Like this is where the economies of scale really kicks in for Tesla is the slower growth in the operating expenses.
Right. And then what about R&D here going up? I kind of like that.
Yeah, honestly, like I don't really look too much into this, frankly. Like the R&D quarter to quarter is going to be lumpy. Like who knows like what like chips they bought for autopilot hardware number 6 that's going to come out in the car in 2023 that maybe they had to pay for this quarter. You know, like you don't know like
Yeah.
R&D is kind of a it's hard to know what's happening. But as long as it's staying about stable as a percentage of the business, that's kind of what I'm envision or like am wondering.
Yeah, yeah. To me, I include. So obviously, there are way more metrics that you can include here. These are the ones that I've kind of come to look at commonly. Of course, depending on how deep you want to go, there's so many different ways to slice this. For me, R&D was one where this is kind of my view of how fast are they pushing the innovation side of it. You can see like coming into 2017, the ramp up on R&D was just massive, right? And so a lot of this is like, how are we going to make the Model 3 and figuring all that out? And then, okay, we've got that figured out. Boom, it drops back down. And now, you kind of see this other climb. So I'm just kind of wondering it's going back up. I like that because to me, that signals that while, yeah, it'll affect profitability, it's kind of keeping the pedal to the metal there in terms of, future developments.
Mhm.
Yeah. Okay, now one of the fun things going on this time, I'm going to stop sharing my screen. Um, and there we have it. So, one of the fun things going on here is there's this platform called Say, and this platform has actually. I'm going to share my screen so Gally, you can see what I'm looking at exactly. This platform actually, you set it up, and can you just share, tell me what this is and what's significant about it for this call today?
Totally. So I partnered with Say. So originally I got on the Tesla call, the Q1 call, the whole let's go to YouTube thing. And since then, I was Say reached out to me shortly after that, and they're a company who is trying to build direct connections between shareholders and companies, and that's like exactly the mission of my YouTube channel. So we immediately went to work building this product, which is basically digitizing what I did on that Q1 call. So instead of everyone emailing me questions and me asking them on the call to represent retail investors, this is a platform where anybody can submit up to 3 questions and it verifies that you are a shareholder. You have to log in with your brokerage. So everybody who's in this platform is an authenticated shareholder and can upvote which questions they want asked or submit their own. And so this is a huge deal for the entire financial industry, frankly, because it's democratizing the voice of the little guy and giving everybody a fair shot at asking a huge CEO a question. So Tesla is confirmed they will open the call by taking questions from here. And so what you're looking at is the top questions. So we had about hundreds of questions submitted, about 60 million worth of participation. And yeah, and these are the top questions that are like the most voted for, I guess.
Yeah, I love this because it's kind of like the something that for the newer kind of tech audience, this is almost a no-brainer, like a Reddit AMA style, or on Crowdcast when I would do live shows. Essentially, it was the same thing where people would ask a question, other people would vote on them. You had to have like special kind of privilege to get into it so that your vote mattered, and it wasn't just like random people dropping by or whatever, things like that, or bots and stuff. So I love this. I am stoked that they're going to do it. I can't wait to hear what Elon and team's answers are. But I thought, as kind of a fun aside, while we wait for the call to begin, why don't me and you just take a stab at some of this here? So
Yeah,
you want
awesome.
to kick it off, or
Yeah, I mean, I have my guesses of what I think Tesla will say and what I think. I mean, yeah. I mean, the first question from Sean Mitchell uh, is addressing what I think, at least as like a Tesla tuber myself. Like, I made a video based on his video about how there's just a lot worse sort of this feeling of customer service declining, and like customer service is a real weak point for Tesla. And so I think and he brings that up and it's gotten the most upvotes, like 72,000 shares is a huge, it's like tens and tens of millions of dollars of people want this asked. um and I'm actually not a Tesla owner, so I haven't seen this personally, but I just feel like this has been a huge issue that's bubbling up. And so they didn't address it on the call. They did, or they didn't address it in the letter. And so I'm thinking they're going to give us a very boilerplate answer, frankly, which is going to be like, yeah, we know we're working on customer service. We're taking it super seriously. Like we're doubling down.
Yeah.
Like, but yeah.
Yeah, no, and so I got my first Tesla 3 years ago, and I've had a Model 3 now for over a year, and so I've had a lot of time to experience this. I chatted with Kim, who has a great channel called Like Tesla that had a similar kind of line of talking about this, and we I think fall into a category because there was a program in 2017 where if you got 20 referrals, you got this VIP concierge. So anytime we submit a ticket or schedule something, it gets bumped up, which was from the referral program. So I don't. Neither of us, like when we talked about it, have really had terrible or bad experiences at all. But because of our presence online, a lot of people have emailed us stating kind of pleading their case, and yeah, it definitely sounds to me the root of it is the system in which Tesla is organized, and that is the classic game of whack-a-mole where businesses just tackle one problem at a time, and they go from problem to problem to problem to problem, and that works for a lot of companies, but it has some really painful side effects, such as layoffs, right? Because you tackle one side of the business, that creates pressure on another one, and then you solve one problem, and then you put all your time and money into another, and now you have too much on the other side, so you have to lay off and kind of restructure that, and so it's this never-ending kind of game. And so my contention with Tesla would be to or what I would contend for them to do is to create a more systems thinking approach. So, for example, if you're going to invest, I don't know, $5 billion, let's just pick a number out for a new factory to make the Model Y and Roadster or something. Well, when you do that, you shouldn't just think, and maybe they don't, but this is what appears from the outside. You should think about how that added production is going to impact every other aspect of the business because in my view, a business is a living, breathing organism. And so you can't just go crazy on one side and not expect it to have an adverse effect somewhere else. So that to me is where I think that the problem with that is that you go a little bit slower, but as you go, it's just much more steady. So that would be, I seriously doubt we're going to hear anything like that from them. But actually, the guy that invented this whole line of thinking, W. Edwards Deming, was basically the one credited with building the Japanese automotive industry back in the 50s. So, it's not like this is actually too far off at all from what they do. So, I would love to hear anything or have a conversation with anyone there about that because to me, I think like this has been solved before. And so I think that there's just maybe a shift in thinking on their side to tackle it. But alas, neither of us are running a multi-billion-dollar energy company. We're just schlepping it here on YouTube. So, all right, how about Robert M? How are you feeling about demand right now across the product line? Is 5 to 700,000 units at 42,000 ASP? What is that asking price?
Average selling price.
Average selling price is still a realistic annual target for Model 3, even considering the impact of Model Y and demand. Do you continue to see S and X 100,000 annually? I wonder if they're going to answer this because I feel like this would maybe allude a little bit to if the answer is like we're going to see an increased demand in S and X. I think that would trigger to me there's going to be an update to the S and X, which I do think, but that would be more of a real clue. But I don't know. What do you think about that? I don't think they'll actually get to 500 to 700,000 units for Model 3 until the Chinese factory comes online in next year.
Yeah, because that 500 to 700 number is something that Elon has actually referenced, and so that's why a lot of the bulls. And this is Rob from the Tesla Daily podcast, so it's awesome to see his question get uploaded. And this is the question I almost have even more after reading the letter. And this was
Mm,
submitted a couple days ago, even before the letter came out, because they guided for 360 to 400,000 cars produced in 2019, which is a lot lower than I was expecting. And I think that's why the stock isn't soaring right now on this beat because the guidance seems to be a little tempered. And
yeah.
so that makes this question even more important in my mind because it's like, what is it? Is it like, are we still targeting that 500 to 700,000 units?
Right. Right. Where's it going? Yeah.
Yeah.
Interesting. Curious if they answer that one. Okay. Alex C, can you please share an update on full self-driving and Tesla network development? When will customers start to see FSD features? What's a best case timeline for a Tesla network to go live?
I
Hmm.
mean, Elon's answer. Yep, fully self-driving will be ready in about a year. And
Just a couple weeks,
just a
right?
couple weeks.
Yeah.
Big new update.
Yeah.
Huge new autopilot update coming. We can't say too much, but
Yeah. Coming in March.
yeah, like
Didn't say what year.
yeah, just do a year. Like the capabilities of the neural net is just off the chart. I don't know.
Right, right. Yeah, it's funny, the context of those things a lot because there's always like, oh yeah, it's walking distance. Well, New York from San Diego is walking distance technically. It'll take you, a few months, but you'll get there, right? So it's like, when
Listen,
will it come? A few weeks. I don't know. Oh man, I I'm long on the idea. I'm short on any kind of timeline here. I'm thinking,
yeah.
I don't know. FSD features I could see in a year or two. Tesla network 10 years minimum for me.
Although we could get some good clarity out of this question if they choose to answer it of like, okay, well, we just dropped navigate on autopilot. What's the next big incremental feature after
Yeah,
that?
well, they've
Exactly.
kind of talked about that, right? They've talked about the smart summon as one of the things, and then not having to so navigate on autopilot right now. You have to confirm any lane changes,
Mhm.
so it's still not truly kind of hands off or whatever. It's not really. So that could be the next thing, is like not having to confirm the lane changes, which personally would scare the crap out of me because it doesn't do great at lane changes in my experience. So yeah, I'd be curious. Like maybe they can answer some of those things that they've already talked about, right?
Yeah, like or just like an update on the timeline.
Right, right. Yeah. I mean, Elon and timelines. Good luck, man. Okay, let's see. If and when will Tesla switch Model S and X to 2170 battery cells? What percent range improvement do you expect? Interesting. Any thoughts
Yeah,
on that one?
so this is even also another one that gets even more important after the letter to me. And this is actually Tesla Geeks, my friend Anwar Beck. So I think this is awesome because I'm super confused because according to like what I've been playing around with the Tesla website, they did actually make the full changes to S and X. Now there's like this add 8% range feature, right? But they're not really showing the kilowatt hours of the pack. So I'm very confused after this 75 kilowatt hour pack drop. Like, have we seen all the changes? Is this the step? Are we finalized with this is how Model S and X are be for a while? Did they switch to this new cells? Why haven't we seen a range increase? If so, you know,
Yep. Yep.
I just
Let, let me see. I was going to try to see because I saw Eric tweet about that. So now if you go to order a Model S or something, did it take it away? There's no longer 100 kilowatt hour. It's just not there at all.
yeah,
Let
and
me
I
see.
don't think it is, but then they have like a box to check that says add 8% range for 8 grand, and that sort of turns it into the longer range version.
Huh. Okay. So let's just see. So it still reports 335 miles, which is the 100D. I'm curious. I want to try this here. Model S and then extended
Yeah,
range.
but see,
Okay.
they're not really and they're not like showing you the size of the pack anymore, which is consistent with that theory of like we're trying to get away from the kilowatt hours, just do mid range, longer. You know?
I wonder why that is. I wonder if that's more of a branding thing or if that's like a how because right now when you are just being obvious and overt about here's how many batteries there are, we can kind of reverse engineer that to figure out the cost per kilowatt hour, et cetera, and maybe they're trying to get away with it so they could change essentially what it is without anyone really knowing, unless they took their car apart, which people will do, but not everyone. So yeah,
Yeah,
so
like
if you
maybe
do.
they are keeping the range the same, but they're switching to the 2170 cells and having a smaller pack overall, and like
Yeah, I wonder if then when they do this, whenever it gets an update, if it'll essentially be the same thing, but then it'll say 400 miles or whatever the new one is.
yeah, but that's what I thought was about to happen, and it didn't.
Yeah, yeah.
That's
Well,
why I'm like,
I'm guessing Model Y unveiling. We'll see that. That's my guess.
well, okay. Which is you're the guy who Elon replied to with the tweet for the Model Y unveiling, March 15th. Is that
That's right.
even Elon said when he tweeted that it probably wouldn't even happen that day, right?
Yeah, but he's reaffirmed that a few times. He
Yeah.
said, Yeah, I mean, I don't think he said that date. He said sometime in March is what I heard. But then there's also this Tesla winter driving event going on in March in Finland,
Oh, the Finland thing. Yeah, I saw that.
which I'm like, okay, and Falcon Heavy, if I understand correctly, is going off in March as well. So March is a busy month.
I've
Yeah.
heard personally that it's the Model Y unveiling has been delayed. Like
Oh,
not
really?
anything official, but that's just like what some random person told me. I don't know if it's true or not.
Yeah. Well, there's a lot of random people
I
saying
would
a lot of random things.
exactly. But my personal guess, just like my own opinion, is it's not going to be in March because they're not even going to have the $35,000 Model 3. And even not as like a Tesla skeptic, just as someone watching the company, it's just like, so how are you going to unveil this $35,000 car in 2016 and like hype it up, and then like I think we need to deliver that before d- saying we're gonna have the $35,000 Model Y and we're taking on hundreds of millions of reservations for it. You know, like I honestly don't think it'll fly over as well if there's still hundreds
Yeah.
of thousands of people waiting for the Model 3. You know,
I wonder how many people will want to switch to the Model Y. So, yeah, that might make sense from their side to say, all right, $35,000, you can order it now, delivery in 6 to 8 weeks or something, and then unveil the Model Y. So anyone that was really serious about the Model 3, put the money down, you're now committed to it. Whereas you still have a refundable deposit. And so maybe you'll switch to the Model Y, which then it's like, you kind of sucked the wind out of the $35,000 Model 3, which maybe they don't care. Maybe there's not enough margin there where they're like, look, it's there. We said
that's
it's
what we wanted.
there, you know?
It's funny because now it's actually my question, but the question you're hovering on here is that's sort of my the production schedule, the semi and the Model Y. That's my other thing. Is like,
Yeah.
where is it? Is the Lathrop building another production, a general assembly production line? I don't
No,
think
I
so.
don't believe so.
They're saying it's a parts hub. Although my personal opinion on that is I think it's a parts hub, but I don't think it may not just be a parts hub, because the biggest thing that why Tesla built that tent was to streamline the actual shape, and it's this perfect U in the tent of the logistics line, and they can have these trucks pull up to the exact place in the tent where they need those parts, and that was a huge logistics breakthrough for Tesla to get the right parts to the right place at the right point in the supply chain. And
Hmm.
the Lathrop building to me has a lot of those similar, like it has those truck bays everywhere. And so it looks like it's basically a real building version of the tent's production line. That so I don't know. That's another random thing that I'm thinking. But
Yeah.
the
Well,
point is,
so
yeah.
this was I did a video on this. There was a leaked document, and Tesla did not say it was incorrect. They said it was outdated. And that document said that they're going to be building it at Gigafactory 1
Yeah.
in Nevada.
So that was actually my question on the Q2 2018 Tesla conference call, was like, where are we building the Model Y and the Semi? Probably at Giga, because you've already said every Gigafactory from here on out will include vehicle production. So
Right,
I
and
was
there's still
told on
so
that.
much room.
And even Elon Musk, if you listen to his answer, was like, wow, like that's an interesting question, or like that's a great, like he was kind of like had something to say about it but didn't say it. And then
Yeah.
that thing came out and leaked and was like, they were planning to build it at Gigafactory, but my reading from that article and Tesla's press response was, we scrapped plans. We were gonna do
Hmm.
Semi and Model Y at Giga, but now we're not. So now I'm even more confused. Why did they not? Why did they scrap the plans? Labor is what they like need
Yeah.
to build the car. How are you gonna get labor in Reno, Nevada? Like you're probably already, you know,
Yeah, I mean, it's not that far from Tahoe and a few other places. I mean, it could be fine. I think they could find people. It's not like a terrible place to live or anything, but
that because that's
um,
my understanding of the DD has been that that is the biggest roadblock, is them
yeah,
recruiting. And there's been like some articles that came out of like it was just too, like they need to hire 3,000 people that could do this, and they just like couldn't even get close, and then they had to be like, you know,
yeah. No, that makes sense. I agree. I remember thinking the same thing. I'm like, where are you going to get the 30 more thousand people you need and have bathrooms and lunch and stuff like that? That they, all the things that many people need. Yeah, it's a good question. But I mean, really, I think we all just want to know where the roadsters are going to be made. So, Model Y and Semi, whatever, we can wait on.
dude, not
Um,
forgetting roadsters. So
yeah, if we're even getting them. Um, okay,
if
can you
you
give an
are
update?
to that, they're just, nah, dude, you're getting one, at least one, right?
I have a reservation with a reservation number. Some people have two. I don't know. how or why, or who decided who gets what. Maybe they looked on Reddit and whatever, something like that. They were like, "Oh, that guy's the best Reddit points" or something. All right, Anthony D, can you give an update on Tesla's plans and timeline around solar roof tiles and Powerwall production ramp? This is a good one. They put out that video of the Gigafactory 2 in Buffalo making all that stuff. I
Yeah.
mean, I
So
don't know if they like brought in, Steven Spielberg to make that or something, and, and it was just like, yeah. But it looked pretty legit. What do you think? What do you think about this one?
I don't know. The solar roof is just taking forever. I mean, they did in the guidance say that they're going to install twice as much energy storage this year as last year. So I think the energy storage product and business model is on fire and really like doing really well. And they
Yeah,
guide for really strong growth in the energy revenue this year because of the battery segment. The roof segment, the solar segment, I just think is in a state of limbo and will be until they really iron out the solar roof. And
yeah,
they're very good at giving like guidance like, oh, it's like a couple quarters away but not years away, but it's been like that for years. And so I don't know. I think this is great. I'd love to hear an update. I don't know if they're
yeah.
going to be able to update us much, but it's always nice to hear an update. That's like with the Tesla Semi and the Model Y. It's like, all right, we'll ask it. If they don't have the update, they don't have the update, but at least we're asking.
Right. I was trying to see if I could find data on it right now. Apparently, that's one of my skills. My buddy's telling me is looking things up while we're talking. But from what I understand, Tesla itself is actually a very small provider of solar panels and stuff like that. So, it's like doubling. I'm th- what you said about them doubling, or all that is great, but I'm just wondering, it's almost like when they first started making roadsters or something, right? It was like you delivered 10 and then you delivered 100. Whoa, like percent growth wise, that's massive. But really it's still like a very small number. So I wonder,
Yeah.
I like in context, how big of a player is Tesla in the solar game? My understanding is it's pretty small, but
Yeah, the solar has been declining, and that I would say that makes sense for the solar, but the battery storage business has been on
yeah,
a
that's massive.
growth trend. And that's like, I want to say like a 500 million, $600 million business in
Yeah,
2018 that they expect to double. So you're talking about it, a multi-billion, like $1 or $2 billion business that's
right.
growing 100%. So
I love the battery
that's
side.
starting to
Yep.
get to the point where that can impact Tesla's overall financials.
Yep. I'm with you.
I so Ben, I'm gonna run to do the call. I gotta take notes, but
All
thank you
right,
for
man.
having me. This has been awesome.
Yeah. Thanks, man. And I will catch up with you later.
Definitely. Thank you so much. Peace
Cool.
out. See you,
See ya.
Tesla. Bye.
Bye, Gally. All right, guys. Well, that was Galileo Russell from Hyperchange TV. I would highly recommend checking out his channel. Looks like we have about 4 minutes here until the call begins. So I'm actually just going to put it over on that for now. Actually, it looks like they're about ready to begin. So enjoy the call, and I'll be listening to the background in case there are any issues. And hit me up in the chat if you have anything or suggestions. Okay.
Assistance during the conference, please press star then 0 on your touch-tone telephone. As a reminder, this conference is being recorded. I would like to introduce your host for today's call, Mr. Martin Vieca, Senior Director of Investor Relations. Mr. Vieca, you may begin.
Thank you, Sherry, and good afternoon, everyone. Welcome to Tesla's fourth quarter 2018 Q&A webcast. I'm joined today by Elon Musk, JB Straubel, Deepak Ahuja, and a number of other executives. Our Q4 results were announced at about 1 p.m. Pacific time in the update letter we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please press star 1 now if you would like to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. Last year was definitely the most challenging year in Tesla history, but also the most successful. Thanks to the incredible work of the Tesla team, Model 3 became the best-selling premium vehicle in the U.S. for 2018. And in fact, when considering battery electric vehicles, Tesla achieved an 80% market share of U.S. sales in last year. I think this point is perhaps not well appreciated. All other electric vehicles combined were 20% of sales in the U.S. in last year. So I think that's not bad. We also delivered almost as many vehicles last year as we did in all prior years combined, which is a tremendous achievement by the Tesla team. If you track Tesla vehicle production year over year, cumulative sales and deliveries year over year, it is about the cleanest exponential I've ever seen. We've basically almost doubled our fleet every year. Every year we make as many cars as we did in all prior years. So this is a very unusual thing to see, especially for a large, complex manufactured object. I think it may be the fastest that a complex manufactured object is, like a car, has grown in history, or at least I'm not aware of anything that is faster. Martin, are you?
I'm not sure. I think Model T was a little bit slower, but I'm not 100% sure.
Okay. And we expect that exponential to continue. So with the deliveries this year being, even in the face of, if there's a global recession, even if there's a global recession, we're expecting deliveries this year to be about 50% higher than last year. And it could be a lot more than that. But even with tough economic times, to see 50% growth is pretty nutty. But with Q4, we achieved GAAP profitability for the second quarter for the first time in company history, and we increased our cash on hand by more than $700 million, even after paying debt, ending the year with a total of $3.7 billion in cash. This means we have enough cash to settle our convertible bond that will mature in March. In addition, our operating margin remains strong at 5.7%. Operating margins in the fourth quarter are usually lower in the automotive industry, but this was not the case for Tesla. Like 2019 is going to be an amazing year for Tesla. As I mentioned, we're expecting to increase sales by 50%. Perhaps could be a lot more than 50%, but I think 50% is a very reasonable number. But that's crazy growth for the automotive industry. I want to note that one of our major priorities this quarter is improving service operations. So really, from my standpoint, when I think about what my priorities are this quarter, it's improving service in North America. That's number one. And I think about some very exciting initiatives we're going to roll out with regard to that. We've got to get cars to China and Europe, and make sure that we have good logistics for the whole delivery process from factory gate to the customer. That's obviously pretty far from California to get to Europe and China, and then get the car to customers. So we're working every aspect of that logistics chain, and I think it's going to be good. I would say at this point I'm optimistic about being profitable in Q1. Not by a lot, but I'm optimistic about being profitable in Q1, and for all quarters going forward. So let's see. We've opened 27 new store and service locations, bringing out our total locations worldwide to 378, and we increased our mobile service fleet to 411 vehicles. Mobile service fleet is something we can scale up very rapidly because we don't need bricks and mortar. We can get more vehicles, hire people, and deploy rapidly. It also actually results in higher customer satisfaction because we can actually send one of our service vans to your work or home and fix the car without you having to bring it into the service center or do any paperwork or anything like that. It's really seamless and visible. The customers love it. And we're also increasing the functionality of the Tesla app for service, so that instead of having to make an appointment, to call and make an appointment, you can just open your Tesla app, say you want to make a service appointment, and it lists the top 10 most frequently requested service items, and you can, with a couple taps, you've made your service appointment. And we're going to make it easier for the car to be picked up and dropped off as well. So if you prefer not to come into the service center at all, you can just request that the car be picked up and delivered. Something that will be so that's already been rolled out. It's had a big improvement in customer satisfaction. That rolled out 2 or 3 weeks ago. But the next thing we want to add is if a car detects something wrong, like a flat tire or a drive unit failure, that before the car has even come to a halt, there is a tow truck and a service loaner on the way. So the car has already notified Tesla Emergency Services, and a service loaner, a tow truck, are on their way before your car has even come to a stop. This will be immense in improving customer happiness. Literally, you'll just call it, and you'll have to tap the center screen to cancel it. So you can cancel it if you want. We just have to. It's like automatically going to happen. Just press cancel. We're also improving parts distribution. So I think we made a strategic error in the past about not having service parts located at our service centers. We had them in parts distribution warehouses, which basically meant it was impossible to have a fast turnaround on servicing a car. Because the car would come in, then the parts would be requested, they'd come to the service center. This would basically, even for a very simple repair, it could take days. So we're going to move to stocking all common parts at the service centers, so that it's possible to, in principle, have get your car serviced in 20 minutes or 15 minutes, even if it's a simple matter. I mean, it should be like Jiffy Lube, like 8 minutes or whatever, 8 minute apps. It should be like lightning fast. But that, in order to do that, we have to have the parts located at our service centers. It's going to make sense for our service centers to do basic body work, or essentially, if all we need to do is replace a front or rear fascia, it makes sense to just pre-stock the front and rear fascia in the common colors. So unless you have an unusual color, we can literally replace your fascia in 15, 20 minutes. And there's none of this like weeks at a body shop stuff. Let's see. In terms of new products, with Model Y, we've completed engineering of and design of Model Y, and the parts are the tooling is going out for production Model Y. 3/4 of the Model Y is common with the Model 3, so it's a much lower capex per vehicle than the Model 3, and the risk is also quite low. This is in contrast to Model S versus Model X, where the theory was in Model X I would consider Model X to be like the sort of like the Fabergé egg of cars. It's an incredible vehicle, and probably nothing like it will ever be made again, and maybe it shouldn't. but it is a work of art. It's a special work of art. But the commonality with the Model S is limited. It was only about maybe 30% in common with the Model S, whereas Model Y is I think 76% or something like that in common with the Model 3. And we're most likely going to put Model Y production right next to, in fact, as part of our main Gigafactory in Nevada. So it'll just be right there. Batteries and powertrains will come out and go straight into the vehicle. So that's also reduces our risk of execution and reduces the cost of having to transfer parts from California to Nevada. It's not a for sure thing, but it's quite likely, and that's our default plan. I would expect Model Y will probably be, the demand for Model Y will be maybe 50% higher than Model 3, could be even double. As I understand it, the midsize SUV segment is worldwide is the most popular type of vehicle. So we'll probably see higher volume of Y than 3. And then earlier this month, we started construction of Gigafactory Shanghai, and by the end of this year, we expect to be producing Model 3s using a complete vehicle production line. That's body paint, final assembly, general assembly, and module production. So it's basically it's moving extremely fast. I get like daily updates of progress of the Shanghai Gigafactory, and this factory is going to go up like lightning. So we do feel quite confident at this point, at least for the factors that are in our control, that we can achieve volume production in Shanghai by the end of the year. And that should allow us to get to the 10,000 vehicles a week rate, or very close to it, by the end of the year. And I think that's it. Okay,
great. So we're going to take the first questions from our retail investors who have been submitting their questions on say.com. So the first question that has been submitted has been about service, which I think you already spoke at length about. So let's go to the second question. The second question would be, how are you feeling about demand right now across the product line? Is 500 to 700,000 units at 42,000 ASP still a realistic annual?
That's my best guess for demand of Model 3 in a strong economy. If the economy goes into a recession, then I think that could be something on the order of 40% less. But I think even in a recession, worldwide demand is still something on the order of 500,000 for Model 3. For S and X, we did eliminate the 75 kilowatt version of S and X, and to provide more differentiation relative to 3 and then Y that's coming out. I think we could see a slight decline in total vehicles, but I think the net cash flow from S and X is likely to be very similar. So probably no major change in net cash flow for S and X.
Okay. The next question from Alex is, can you please share an update on full self-driving and Tesla network development? when will customers start to see full self-driving features? What's the best case timeline for Tesla Network to go live?
Sure. Well, we already have full self-driving capability on highway. So from highway on-ramp to highway exit, including passing cars and going from one highway interchange to another, the full self-driving capability is there. In a few weeks, we'll be pushing an update that will allow the option of removing stalk confirm in markets where regulators approve it, which we believe that will be the case in the U.S., for example. And over time, we think probably all regulators will approve it. But we kept stalk confirm there just to make sure that we took care of any strange corner cases. And it's really quite sublime if you have stalk confirm off and the car goes from highway on ramp, passes slower cars, takes an interchange and then takes the exit and then comes to a stop after the exit. So it's really quite profound to have that experience. Then the next part of full self-driving would really be is traffic lights is hard. So stop streets are pretty easy because you can essentially geocode those, and it's easy to recognize stop signs. Traffic lights and intersections will be the next really tricky one, and then navigating complex parking lots and if you're underground in a mall parking lot with a lot of traffic and pedestrians and it's on multiple levels, that kind of thing is where things get tricky. With the release of enhanced or advanced summon, you'll see the first indications of the car being able to navigate complex parking lots. And that's also coming out fairly soon, probably next month. And in development mode, the car does all of the things that I just mentioned in development mode. So it recognizes traffic lights and stop signs and you can basically has all the functionality in development mode. It's really just a question of getting the reliability of recognizing traffic lights to several nines. So it's maybe it's I don't know, 98% good right now, but we need it to be 99.999. Really extremely reliable. So I mean, in a nutshell, when do I think the capability will be there for? When will we think it's safe for full self-driving? It's probably towards the end of this year, and then it's up to regulators to decide when they want to approve that.
Okay, let's go to the next question, which is, if and when will Tesla switch Model S and X to 2170 battery cells? What % range improvement do you expect?
We have no plans to switch S and X to 2170 and can't comment on future product developments.
Okay, so maybe we'll take the last question from retail investors, which was, where will Tesla Semi and Model Y be produced? Can you share a timeline on expected production ramp of these products?
As mentioned earlier, the Model Y we think most likely will be produced at Gigafactory. Unless we encounter some obstacle, that's the default plan that we're proceeding towards. And it's fast, low risk, and relatively low capex. In terms of the probably there's initial production of Model Y in very low volume early next year, but then it always takes time to ramp up any production system, and it's difficult to predict the shape of that S curve. So we feel confident saying there'll be volume production of Model Y by the end of next year, but in between the beginning of next year with low volume, it always starts with very low and it grows exponentially. From beginning of last year to end of next year, it's difficult to predict that ramp. So that's our expectation for Y. For Semi, we're I don't know if you want to comment on that.
I want to start next year as well.
Yeah.
But the first units will be, this is Jerome, first units will be for our own usage.
Yeah.
So depends how many trucks we use for our own usage to move the parts and the vehicles to different locations, and then we'll start delivering to outside customers.
Yeah, sounds good. And then the Tesla pickup truck, we might be ready to unveil that this summer. It'll be something quite unique, but like anything else.
Okay, fantastic. So, operator, we can start taking questions from participants on the call.
Thank you. Our first question comes from Ryan Brinkman with J.P. Morgan.
Great. Thanks for taking my question. I see in the letter the amount that you have spent on land for Gigafactory Shanghai and the classification of operating cash flows. Is there any guidance you can provide us in terms of how to think about CapEx for this facility going forward? And can you discuss the source of funds for the project? I think you've spoken in the past about the potential to raise debt locally in China. Is that still your thinking, and on what kind of terms might you be able to raise that capital? Thanks.
Yeah, Deepak here. You're right that the purchase of the land is a 50-year lease with the government of China, so it's not CapEx, but it's operating lease that shows up in cash flow from operations. However, the CapEx that we will invest is our equipment, and we fully own it, so that will show up as capital expenditures. The plan, as we have indicated in the letter, is still to get funding for majority of that capital spending from local China banks, and we expect very attractive rates based on the dialogue we've had, and there's a lot of interest, and we hope to finalize that and then share the details at that point.
Yeah, as a ballpark figure, probably something on the order of $500 million for in capex to get to the 3,000 vehicle rates in Shanghai, ballpark figure. And as Deepak was saying, we're being offered very competitive debt financing in China, really extremely compelling interest rates, and so we do not expect that to be a capital drain on the company.
Yeah, these are the biggest banks in the world,
yeah.
And for them, $500 million is not a large amount of money in the scheme of things.
Thank you. Our next question comes from Gene Munster with Loop Ventures.
Good afternoon. Something like that's perhaps if you're in the automotive industry, you understand how significant this is, but maybe it's like not as obvious to everyone. Is Tesla has the first wholly owned a manufacturing facility in China of any automotive company.
Right.
So this is profound, and we're very appreciative of the Chinese government allowing us to do this. I think it is symbolic of them wanting to open the market and apply and fair rules for everyone. I would say like a note of appreciation for the Chinese government in allowing us to do that. It's a very significant thing.
Good afternoon. The question I have is related to Waymo and the autonomous driving opportunity. Morgan Stanley recently valued Waymo at $175 billion, and my question is, what do they have that you don't have? And separately, so what do they have that you don't have? And then separately, how important is autonomy to the Tesla story longer term? Is this nice to have? Is it really about EVs and renewable energy, or is the autonomy kind of one of the foundational parts of the story longer term?
The fundamental goodness of Tesla, like the why of Tesla, the relevance, what's the point of Tesla, comes down to two things: acceleration of sustainable energy and autonomy. Now, acceleration of sustainable energy is absolutely fundamental because this is an existential risk for humanity. So obviously that is by far and away the most important thing. But also very important is autonomy. This has the potential to save millions of lives, tens of millions of serious permanent injuries, and give people their time back so that they don't have to drive. They can, if you're on the roads, you can spend time doing things that you enjoy instead of in terrible traffic. So it's extremely important. We feel confident about our technical strategy, but I think we have an advantage that no one else has, which is that we have at this point something on the order of 300,000 vehicles on the roads with a 360-degree camera sensor suite, radar, ultrasonics, always connected, uploads, essentially video clips with the customer's permission when there's an intervention. So effectively, we have a massive training fleet. The miles of training that we have, if you added everyone else up combined, they're probably 5%, I'm being generous, of the miles that Tesla has. And this difference is increasing. A year from now, we'll probably, if you go 18 months from now, we'll probably have 1 million vehicles on the road with that are, and every time the customers drive the car, they're training the systems to be better. I'm just not sure how anyone competes with that.
Thank you. Our next question.
Sorry, Jean, do you have a follow-up question? Okay, no follow-up question. Okay, let's go to the next participant.
Thank you. Our next question is from Colin Rusch with Oppenheimer.
Thanks so much. Can you talk a little bit about the geographic dispersion for the guidance for 2019, where you're expecting the Model 3s to sell through, as well as the other models?
Well, I think we did actually. Yeah.
Yeah.
It's clear in our letter.
Correct. We indicated in Q1 we will start delivering Model 3s in Europe and China. We also shared a chart showing the potential market size for mid-size premium sedans in North America, Europe, and Asia, suggesting those markets could be even bigger. So I think that gives a good sense of where we'll be, and we'll launch the right-hand drive version at some point to go to the other markets.
Yeah, it's maybe on the order of 350 to 500,000 Model 3s, something like that this year.
Okay.
Okay, and then thanks, guys. And then just in terms of the cost reduction roadmap and rework, post factory, can you talk a little bit about your expectation for reducing that in the next couple of quarters, and what the order of magnitude is on that in your model internally?
Jerome, do you want to answer that?
Just Jerome. Yeah, well, our manufacturing keeps improving quarter over quarter, actually week over week. We take fewer hours, both here in Fremont or at the Gigafactory, to assemble the Model 3 and SNX as well. And then we track the quality very closely. We review that carefully with the engineers and the supply chain and the manufacturing teams. And the quality in the field and the number of incidents is also improving week over week, every week. So there are fewer and fewer need for cars to be in service. Yeah. So we'll keep going. There's no end in sight, and we'll try to make sure that the car never breaks down.
Yeah, I think there's some confusion about rectification. Essentially, for the vast majority of Model 3s that come off the line, all that happens is some slight adjustment of door gaps and panel gaps and that kind of thing, and that's all that's done.
Yeah.
There's nothing more than that.
Okay, let's go to the next question, please.
Thank you. Our next question comes from Colin Langley with UBS.
Oh, great. Thanks for taking my question. Just to follow up on the comments around, you said about 700 to 800,000 you think is the normal demand. I mean, any color on what price you're expecting that to be? Because I think there's a lot of chatter that demand is already weakened, of the mid-range at least, already in January. I don't know if that's true as well.
Yeah, I mean, it's important. There are multiple factors at play here. First of all, there's a lot of seasonality to automotive purchases. Most people do not buy a new car in the middle of a blizzard. So January and February tend to be seasonally low, and then it picks up significantly around the early to mid-March timeframe. Then in the U.S., we also had a pull forward of demand from the tax credit, and yeah, there's those factors. But I feel very confident about Model 3 demand. The customer happiness level with the car is incredible. I mean, I think probably the highest of any car in the world right now, I would think. And you can tell, like, basically nobody wants to sell a car.
Yeah.
So,
But
yeah.
the target price point is, I think in the past you mentioned mid 40,000. Is that where we're thinking, or that's
I mean,
still
as
the long-term range?
This is really just a guess. So it's not like I have some huge crystal ball or something. But at volume, I would expect, this is totally a guess. I want to be clear. Probably an average of $42,000, probably at that volume level. I'm not certain, but I get it.
And just as a follow-up, you commented that you expect China to be online by the end of the year, but there's a lot of articles that the battery supplier, you're looking at different battery suppliers still. I mean, do you have a battery supplier? Because it seems kind of close to when production is supposed to start.
Well, there's really three things. There's the cell, the module, and the pack. We will be making the module and the pack, so it's really just a question of cell supply. We can essentially use any high energy density 2170 chemistry, and we expect it to be a combination of cells produced at our Gigafactory in Nevada, cells produced in Japan, and cells produced locally in China. And we feel confident of sufficient supply to hit the 3,000 units a week.
Okay, let's go to the next question, please.
Our next question comes from Emmanuel Rosner with Deutsche Bank.
Hi, good evening, everybody. First, I wanted to ask you about the short-range Model 3. What are your latest thoughts in terms of timing of introduction? I think at some point you had in mind to do it, in maybe the first half of this year. And just to clarify, when you sort of talking about the outlook for 2019, the number of deliveries up 50%, and then the margin target for Model 3 to get to 25%. Does that assume that you're introducing a lower range, the short range Model 3 at some point during the year?
Well, we call it the standard range, but it's maybe short by Tesla standards, but it's long range by other manufacturer standards. So we expect to introduce the standard range Model 3, sometime probably in the middle of this year is a rough guess. We're working hard to improve our costs of production, our overhead costs or fixed costs, just costs in general. I think this past year, while it's extremely difficult, has driven us to a high level of financial discipline. I think we were way smarter about how we spend money, and we're getting better with each passing week. Yeah.
And so to be clear, you expect to reach at some point this year, or you're targeting at some point this year 25% gross margins on Model 3, and that's despite introducing the lower end, or I guess the standard range Model 3. Is that correct?
Yes.
Okay. And I guess my follow-up would be on the demand side. So you're talking about 50% increase this year. You said a few times that it could be higher than this. I think you just mentioned in the previous question, 350 to 500,000, if I understood well. So what is sort of like what drives the cautious outlook that's in your letter? Because it feels like it's just basically 4 times the fourth quarter run rate, which would imply sort of 50% for the full year, but not really a lot of growth versus what you just accomplished. So I guess how do we think about the total demand for 2019, especially if you introduce this the cheaper version?
Well, we need to bring the Shanghai factory online. I think that's the biggest variable for getting to 500K plus a year. Our car is just very expensive going into China. We've got import duties, we've got transport costs, we've got higher cost of labor here, and we've never been eligible for any of the EV tax credits. A lot of people criticize Tesla for being sort of dependent on incentives. In fact, we are for a company making EVs, we have the least access to incentives. It's pretty crazy because there's so many companies countries that have put price caps on the EV incentive, which differentially affect Tesla. And in China, which is the biggest market for EVs, we've never had any subsidies or tax incentives for vehicles. So it's difficult. If once a car is made there, it is eligible for that. Although that sounds like that's going to be reducing in China in the coming years. But really, bottom line is we need the Shanghai factory to achieve that 10K rate and have the cars be affordable. The demand for it's important to appreciate that the demand for Model 3 is insanely high. The inhibitor is affordability. It's just like people literally don't have the money to buy the car. It's got nothing to do with desire. They just don't have enough money in their bank account. If the car can be made more affordable, they will. The demand is extraordinary.
Okay, thank you. Let's go to the next question, please.
Our next question comes from Pierre Ferragu with New Street Research.
Hey, thank you. Thanks for taking my question. So, Deepak, I was wondering, so as you look at 2019, we're all concerned about a potential recession, and I was wondering how you think about it and what you would tell us about what we should expect, how we should expect Tesla to react to a recession in 2019. How do you manage your volume ramp? How do you manage your pricing? How do you preserve cash? How do you manage your capex if things turn south in 2019? And then I'll have a follow-up on gross margin for Jerome.
Yeah, it's a very broad question, which is not really just for me to answer. But I think at a highest level, that the way we are trying to be prepared for any kind of contingency here is to just continue focusing on cost. And the theme of our conversations here is how do we reduce cost all the time, and how do we run our business with a very high level of financial discipline. And Elon alluded to that, and so did Jerome, I think. And if we do that, we believe that even in some of these scenarios of lower volumes and pricing and tight pricing, we do have a good chance and a good shot of being profitable and generate free cash flow. So that's the best way to manage the business, be frugal.
Yeah,
thanks.
Yeah, the risk of, I want to be a broken record about this. It's cost. Because reducing our costs, by the way, while making nuanced improvements to Model 3, I want to emphasize the product is getting better by slight degrees, despite lower cost. In hundreds of small ways that you actually most people wouldn't notice explicitly, but they would appreciate subconsciously. But getting those costs down, variable cost and fixed cost, is what allows us to lower the price and be financially sustainable and achieve our mission of environmental sustainability. So we have to be absolute zealots about this. There's no question.
The other aspect of this, Elon, which we've been doing extremely well, is capital efficiency. We have dramatically cut back on capital expense, and we're spending it in a very efficient manner. We talk about it in the letter on Model 3 and Gigafactory Shanghai. We talk about it for Model Y. There's just so many learnings that we are incorporating, and we just won't repeat what we did with Model 3. and the kind of spending we had for the returns we got.
Absolutely. I mean, we're confident that our capex per unit of production for Shanghai factory and for Model Y will be less than half of what we did for Model 3. Internally, we think it might be a quarter, but that's probably too good to believe. But it's definitely less than half.
Yeah. Great. Let's go to the next question, please.
Thanks.
Thank you. Our next question comes from David Tamberrino with Goldman Sachs.
Oh, great. Thanks for taking our questions tonight. First thing I want to just understand is on what you're seeing from European orders and China orders so far. There's some numbers that get thrown around, but you guys are obviously taking a look at it. How are that order profile shaping up relative to what you saw in the U.S. with the launch of the 3?
I mean, it seems good. I mean, our issue actually with Europe and China is how do we get the cars made and on a boat at such that it reaches customers before end of quarter, and we don't have a massive number of cars on the water. That's our biggest challenge. It's not demand. It's how do we get the cars there fast enough.
So like orders above the, I think I've seen like 20,000 order levels for Europe and single-digit thousands for China. It's better than that, Elon?
Yeah, absolutely.
Okay.
And we're not even really trying. I should point out, like it's you know our factory is like right now only making cars for China and Europe. That's all it's doing with respect to Model 3, and our whole focus is okay. How do we get those cars made? Get them on a ship as fast as possible. Get the ship as fast as possible to Zeebrugge in Belgium. Then get them to Drammen in Norway, and get those cars to customers as fast as possible. We get them to China as fast as possible. And China, we're also, you know, we don't know what's going to happen with the trade negotiations, so it's very important to get those cars, especially to China, as soon as possible. You know, we hope the trade negotiations go well, but it's not clear. But we need to get them there while there's sort of de facto, sort of a truce on the tariff war. Demand gen is really not one of the things we're thinking about.
Okay, then just lastly on this demand thread, customer deposits came in again over $100 million. Is it possible to give us an update? I know you don't think it's really a relevant number, but I do want to explain why. On the reservation count, where you were at 450,000, you started delivering, and I ask this because I think we're just all trying to understand how much incremental demand you think there is based on what you see at that lower price point. If say there's over half of those people that are still waiting for that 35K base model to come out, that would be interesting, and I think that's what you're seeing, but I just want to confirm that.
So, do you want to add?
Yeah, I mean, I think reservations are not relevant. For us, we are really focused on orders. Now, we do have a large reservations backlog still, which tells us that a lot of customers are still waiting for those cars, but I don't think it's appropriate to share the reservations number.
Reservations just like pre-orders. It's like if you have like some video game come out and it's like a pre-order number, but then that's like stops being important once you start shipping the game or product. So yeah, as I said earlier, I think my guess is demand is somewhere on the order in a strong economy is on the order of 700,000 or 800,000 units a year for Model 3, and even in a recession, it's probably on the order of 500,000.
Okay, let's go to the next question, please.
Thank you. Our next question comes from Daniel Ives with Wedbush Securities.
Yeah, thanks for taking my question. So my question is around Europe. Obviously with deliveries coming on board in the first quarter, maybe what surprised you in terms of demand looks strong, but in terms of what you're seeing out of the region, is it stronger than you expected in certain countries? What do you think is driving that? And maybe you can just talk about the opportunities and challenges in Europe, especially from a delivery logistics perspective? Thanks.
Well, like I said, we're thinking about demand almost zero right now. It's really getting the product there in time and not having a ton of cars on the water at end of quarter, and then for China getting cars there before there's a potential rise in tariffs. That's really really occupying our mind. That cost reduction and then improving service in North America. Yeah.
Right, and just maybe a quick follow-up. Can you just talk about when we look at the Gigafactory build-out in China and obviously how important that is, maybe just fast forward, let's say 18, 24 months. I mean, how do you envision that as just a competitive advantage versus maybe some other automakers that will be trying to go in your tracks? Thanks.
I think it'll be quite a significant advantage. I really feel it's quite fundamental to the future of Tesla, and I expect to make several trips to China this year, and I'm working very closely with the team building the factory. We literally get daily updates, so it's a super big deal, and we're only just talking about phase one here. Phase one is about 10% of what we think the Gigafactory will ultimately be. So it's a major deal, and we're getting a lot of support from the Shanghai government, which we're very, very appreciative of, and the national government.
Okay, let's go to the next question, please.
Thank you. Our next question comes from Tony Sacconaghi with Bernstein.
Yes, thank you. You've talked repeatedly about the need to drive down costs, which in turn drives the elasticity of demand for cars. And I'm wondering if you can talk about how much of the price differential between, the $50,000 Model 3 and the $35,000 Model 3 is structural, meaning that powertrain costs for EVs are just structurally higher than they are for internal combustion engine cars, and where you think that difference is today and when that is no longer a factor. So or maybe said another way, is the bigger driver in getting to lower costs and more affordability on the Model 3, is it really around the powertrain and getting that at parity, or is it everything else about Tesla not being as efficient as other manufacturers that is causing the higher price right now? And I have a follow-up, please.
It's both. It's both
Yes,
the vehicle and both the powertrain.
Everything.
Yeah, I split my time half and half between the Gigafactory and here, and there's opportunities in both. Yeah.
But I think the bigger point is that, there's cost reduction opportunities out, but the bigger point is it's not that our cost is higher than a gas-powered or an internal combustion engine.
I think what Tony meant is with the battery pack, as in battery pack as well as the powertrain together are more expensive than an engine.
That's true.
Yeah.
This is true.
How big do you think that delta is today, and when, do you think of it as being kind of $10,000, $11,000 for that pack plus powertrain for an electric vehicle and maybe $5,000 or $6,000 for an internal combustion engine car? And is that sort of the order of magnitude, and where do you see those getting much more aligned, just sort of given the laws of where you think cell and pack costs are going?
Well, the thing that's important to bear in mind is that the cost of electricity is quite a bit less than the cost of gasoline, especially in Europe or in California or China, basically almost everywhere except say the middle of the United States. The cost of gasoline is very expensive and electricity is far cheaper. So that factors into the cost of ownership pretty significantly, and it's typically on the order of $50 to $100 a month. depending upon how much somebody drives. So that's a very important thing to consider for an electric car versus a gasoline car. That said, in terms of the initial cost of acquisition, I think it's probably this is just off the top of my head, not a calculated number. Probably on the order of $7K, but trending towards $4 or $5K.
Okay.
Just off the top of my head.
Okay. And as you think about 2019, you talked about sort of scenarios for demand and how you plan to roll out the intermediate range and then ultimately the standard range. What is, if you do have to make a trade-off on volume or profitability during the course of the year, meaning to get the volume you need or you think you can deliver, you have to go to lower margins or vice versa, where's the trade-off? Are units produced most important to you, or is delivering the 25% gross margin more important? So if you have a chance to deliver 450 or 500,000 cars, but there'll be more standard editions and gross margins will end the year at 20%, are you willing to make that trade-off?
My guess is it ends up being sort of about the, it's 6 of one, half dozen of the other, where, if there's a given amount of free cash flow, you sort of either decide to achieve that with a smaller production or a smaller volume of cars, or at a higher margin, or large volume cars at a smaller margin. I think we are towards the second. We'd rather make more cars at a lower margin, but I think it's more or less a flat trade.
Okay, let's go to the next question, please.
Thank you. Our next question comes from Maynard with Macquarie.
Hi, thank you. Can you just update us on where battery costs are now and where you anticipate they'll be by year end? I'm just trying to gauge how much of a factor this is to lowering cost and sustaining profitability.
This is a highly proprietary number. We cannot give it out.
Okay.
But I'd like to tell you, but no.
Okay.
We do think we have the best cost in the world. To the best of our knowledge, our costs are better than anyone else right now, and they're improving.
Okay. And maybe talk about your expectations with the Panasonic Toyota JV and how it might impact you. Was this something that you were made aware of?
I spoke directly with Suga-san about this, the head of Panasonic, and he has assured me that this will have no impact on the Tesla.
Okay, thank you very much. Let's go to the next question, please.
Thank you. Our next question comes from Dan Galvis with Wolfe Research.
Hey guys, thanks a lot. Do you plan to offer a U.S. lease product for Model 3 in the U.S.? When can we expect it? And can you talk about what percentage of S and X have historically been leased in the U.S.?
Well, we've been reluctant to introduce the leasing on Model 3 because of its effect on GAAP financials. So it is worth noting that our demand to date is with zero leasing. So obviously leasing is a way to improve demand, but it has it makes our financials look worse. So we've not wanted to introduce that right away. We'll introduce it sometime later this year probably. I'm not sure what the percentage of leased is for S and X right now.
It's around 20%, low 20s, and it stayed stable at that level for many, many quarters. It feels like the natural demand because we don't do subvention or artificially pump up.
Yeah, exactly. Our leases are legit. It's usually like a small business tax write-off, is important for the for leasing. So.
Okay. Okay. Thanks. And then I have just like two quick housekeeping questions. One, is there a restructuring charge that you expect in the first quarter? How much is it, and is it included in your expectation of a small profit?
Yeah, it is included in that. It's difficult to say exactly what that is. No, it's at this point, it's, let's say, roughly around $40 million, but that number can vary slightly.
Okay, thanks. And then just the last one is...
Yeah. Sorry, go ahead.
Yeah, the last one is this change in your service parts structure to make things, more distributed rather than in the parts warehouses. Would that be like a meaningful working capital drag? Well, what's the cash impact of that?
No, it's actually we've just been very silly about where we store our parts. So it's actually going to be no change in sort of working capital, or not something you would even notice in the financials. It's just being smarter about sending parts directly to service centers. In fact, either directly from our factory here or from our suppliers, and just ship them direct to the service center. Right now, actually, our costs will improve. Mm-hmm. I think actually quite a lot, because there's been actually the current system is quite boneheaded, actually. Speaking self-referentially. So just stopping doing the foolish things will massively improve our service costs, massively improve customer happiness around the world, and it's just fundamentally better all around. I mean, there are some pretty, we've been just like super dumb in some of the things we've done. Where, like when on one of the trips to China last year, I always asked, okay, what are we doing wrong? What can we fix? And our China team, who's great by the way, they're like, well, do you think we could have spare parts that are made in China just sent directly to our China service centers? Because currently there's a bunch of parts that are made in China, then sent to a warehouse in New Jersey, and then sent back to China. Literally what was happening. Super nuts stuff. So it's going to get way better. Yeah, it's way better.
Okay, let's go to the next question, please.
Thank you. Our next question comes from Ben Kallo with Baird.
Hey, great guys. I have one question that's got 4 parts to it. Happy New Year, Elon. So the first part is, our street numbers and consensus, we've gotten everything wrong for 6 years or 7 years to the public, and they're about $6 in earnings. Talk to us about that if you can. Number 2, Elon, can you talk to us about, you talk about, I hear you cut some workforce at SpaceX and then there at Tesla. And I feel like that you have a worry about global economy. Can you talk to us about how you feel about that with your guidance in order, in the same order? And then can we talk about maybe for the third thing, for JB, no one's ever going to talk about stationary storage, but we had a whole page on that, which looked pretty good to me. And what should we be focusing on that? And what can that add to the bottom line on top of that $6 this next year? Thank you.
I mean, we can't really then talk about consensus and what that means. I think we have maybe the better approach is we are providing certain guidance here, and you and the other analysts need to reflect that in your modeling, and that's the best indication from the company of our projections. In all fairness, that's the best way I can think of answering your question there.
Yeah, JB, something you want to say?
I mean, I think the letter outlines the predicted growth in the battery storage business, the stationary storage business, pretty clearly, and that that should be included in the projections as well. So, I mean, we're excited about it, but
Yep.
can't say much more in much more detail.
I mean, our internal projections for stationary storage are closer to 3 gigawatt hours. But some of it's kind of lumpy and may or may not be completed this year. We would have done more in stationary storage last year, except we were cell starved for vehicle production, so we had to convert a bunch of stationary storage lines, battery lines, to vehicle battery lines. Otherwise, we would have done quite a bit more in stationary storage. I expect that to grow, I mean, probably twice as fast as automotive for a long time.
We continue to set production records basically on every month, so it's growing.
And the profitability of the storage business and the gross margin will continue to improve as we keep ramping up production and scale.
It's going to be a gigantic business down the road.
And the last question was about economy, global economy.
Sure. I mean, I do think that the economy moves in cycles, and there's clearly a significant risk of a recession over the next 12 to 18 months. But I'm confident that Tesla will remain at least slightly profitable, even if there is a significant recession, and be all the stronger for it when the recession ends. We have to be relentless about costs in order to make affordable cars and not go bankrupt. That's what our headcount reduction is about. We have to be super hardcore about it. It's the only way to make affordable cars. On the SpaceX side, the cost reduction was for a different reason, unrelated to the SpaceX side is really, SpaceX has 2 absolutely insane projects that would normally bankrupt a company. There's Starship and Starlink, and so SpaceX has to be incredibly Spartan with expenditures until those programs reach fruition.
Okay, great. I think that's all we have time for today. Thank you very much for your questions. And Elon would like to have some closing remarks.
So let's see. Deepak is well, I'll let you make the announcement, but Deepak is going to be retiring
again.
From Tesla. Deepak, I think it's now been. I think you first started Tesla about 11 years ago, right?
Been close to that, yes.
Yeah, almost 11 years. Thank you for your tremendous contribution to Tesla. It's announcing retirement. Retirement will not be immediate, but Deepak will continue to be at Tesla for a few more months, and will continue to serve as a senior advisor to Tesla for probably years to come, hopefully. We thought long and hard about who the right person is to take over from Deepak, and that's Zach. Zach has been with Tesla now 9 years.
9 years.
Yeah. So Zach did management and technology at Wharton undergrad, and then worked at Tesla, and then spent a couple of years at Harvard Business School, which I actually don't think was necessary, by the way.
You told me that when I came back.
Yes, exactly. So Zach's incredibly talented, has made a huge contribution to Tesla over the years, and obviously a very well-known quantity to the whole team. It has the respect of the whole team. And Zach, I don't know if you'd like to say a few words?
Yeah, I will.
Okay. Or do you want Deepak to say anything?
Sure.
Okay.
Thank you. Yeah. No. First of all, Elon, thank you very much for the opportunity for me to be here and be here again a second time. I've learned a lot from you, and I've been always inspired by you. and I've been also very inspired by the team at Tesla, who are incredibly brilliant, very passionate, and just amazingly perseverant. The best team I could imagine. So thank you, everybody, for that. There is no good time to make this change. We felt still this was a good time. It's a new chapter, new year. Tesla has had 2 great quarters of profitability, cash flow. It's on a really solid foundation. And I feel really good about Zach taking over as the CFO. He's proven himself with his many years of experience and many tough challenges that he's worked on, and really excited to have Zach take on this role, and I'll be here to support him and make sure we are all successful as a company.
Yeah, well, thank you, Deepak. Thank you, Elon. So my name is Zach Kirkhorn. Just a brief background on myself. So I joined Tesla just under 9 years ago. We're a super small company with a lot of potential ahead of us, and I was attracted to the mission and the vision of the company. Throughout that time, I've been deep in the operations of every major program of the company, from the Roadster to Model S and X, Model 3, scaling our energy business, and more things to come, which we've talked about on the call. I feel we're starting 2019 with a very strong financial foundation. We have enough cash to continue launching new programs and developing new technologies, and we're able to service upcoming debt obligations with our forecasted cash flows. My focus, alongside the talented and amazingly passionate team at Tesla, is to ensure we continue the terrific momentum on cost management and operational efficiency, which will enable more access to our products around the world, which is key to achieving the mission of the company. On a personal note, Deepak, a huge thank you to you for your leadership, mentorship, and support, and very much looking forward to discussing our progress on future earnings calls.
Great. Thank you very much. We'll speak to you in 3 months.
Thanks, guys.
Ladies and gentlemen, thank you for participating in today's conference. This concludes the